All right, so getting into the morning, like I had stated, I did come into today with a relatively loose bias, and that was directly because we had a bank holiday yesterday. I know a lot of times that bank holidays, the overall structure and overall range of the market on that given day, given it is a shortened day, is going to be a lot lower than any normal day. So knowing that and anticipating there to not be really much reference for price to refer to in this day today, I came into today with a loose bias, kind of giving any give or take setup as long as it was in congruence with some form of higher time frame confluence, right? So the first setup I did take an AM, and this is the only one I took an AM, and then I started taking some more when I was at the gym and when I got back. But if we go over on the 12-minute, and excuse some of these because there's a lot of markings right here, but I want to show this and kind of and explain this in a more easy term, right? So on the 12-minute, if I draw this over a little bit, this is something, if you saw in the PDF, you should semi-understand this if you didn't already know what fractals were. Right here, you can see we have the strong displacement, right? This is this opening bell basically just displaced completely down, right? But what we see up here is we see a fail to close, right? Strong displacement. So we can anticipate any move back up here to be some form of retracement and then a possible continuation, right? Because if we zoom out a little bit more, right? We have a bunch of stacked lows right over here, not specific equal lows. Yes, we do have a break up there, and we should continue out from there. But a lot of times what we'll see is we'll get a deeper mitigation down to some of these unmitigated wicks and unmitigated candles on the higher time frame, right? So having that thesis, right, we can identify this 12-minute fractal right here, right? Which is also in alignment with this 12-minute CSS. So there's kind of two instances you could do. You can wait for that 12-minute CSS, or you can wait for the 12-minute fractal. And a lot of times you can get two setups off of these, right? You can get a fractal play, and then you can get a CSS play. Unfortunately, there really wasn't one up here as we started to disrespect some PD arrays, which I'll cover here in a moment. But this specific setup right here, right? You can see we come up short of this fractal right here, right? This pink box right here is this 12-minute fractal, right? Which is also this little, we have this micro zone right over here, right? On a lower time frame, this would be a lot cleaner than it is right here. So we can identify, right? This white line right here is the 50% of this little area right over here, right? So what we see price do is price trades up near it, trades away, right? This is a fake out right here. People are going to be shorting right here, right? We have this break right here. People are going to be shorting in this imbalance. They're going to be like, oh, we're going to go target these equal lows, right? Now, what did they not wait for? Structure to form in front of them. 9 times out of 10, the best setups that I've said multiple times are going to be based off of inducement rather than taking some high like all the way on the opposite side. That's why I primarily focus on the structure, especially on the lower time frame, that is forming right in front of me, right? It's important to not get too caught up over here because at the end of the day, structure and what we should be letting guide us is going to be our higher time frame, right? Because obviously, if you're looking at the higher time frame, you would not be executing a trade up here. But if we're looking at the higher time frame, where would we take the execution off of, right? The fractal tab, right? And that's something very, very important to note too. Kind of a little tangent that you need to be acting as if you're trading your higher time frame, not your low time frame. You're going to get the best executions possible, and your hit rate's going to 10x from that, right? But specifically, like I said, price traded up, faked out people. We come up, what do? We wick this high, tap into this 12-minute fractal, tap the 50% of that area right over there, right? And we close back into the range. This is one of the, and probably the biggest main principle of this specific model is we're waiting for that close back into the range because what happens, right? This low becomes weak, and this is going to be one of the easiest targets you can possibly have. It's a very high confluential target that is always going to happen. It's going to happen every day, almost every hour, if not more than that, right? But the entry function here would be taking I still mix them up. It's a seller buy stop right below this candle, right? You're playing the quote unquote breakout of this candle, anticipating a move down here, right? And what I like about this specific entry function is that price really does not refer much to it. So, Brendan, chill. He always corrects me on that. But the beautiful thing about these kind of entries, right, is Price really does not get a deep mitigation. You can see the whole entire time past this candle closes up here, closes down here. The deepest we reach into drawdown would be 3 points right there, right? And if you read that PDF, what I like doing is playing with a 10-point stop at a maximum because it removes risk averse for me. I usually don't want to ever be in a position where I'm over risking more than 10% of my drawdown allotment. Even at peak balance, it's smart to do so because it just gives you more opportunity and gives that peace of mind that you really want to be executing with, right? So specifically, again, right there, right? Sweep, close back in, break of that candle, sell stop, targeting the weak low right here. And you can see that I've talked about multiple times is price will gravitate towards areas that has a lack of accumulation right here. You can see we have all this accumulation right up here, and then we come refill all of this stuff. Not totally refill it, but we refer back to it, right? So that was the first and only setup. I took an AM before I got off. It was pretty nice. Obviously, it's not and wasn't the biggest move, but hey, a win's a win. And at the end of the day, that's really all that matters. And then this next setup I want to cover, right? And specifically why I disregarded this 12-minute CSS right here and started to anticipate this high to be gravitated towards, right? And primarily, it is because this 12-minute imbalance right here, we completely closed above it. We really did not reject off of it too much at all. And once we closed above this, I automatically anticipated this 12-minute CSS to really not do anything for price. And this to be a quality setup. And I don't think I did not take this, but this was actually a really, really good example to cover directly because of that. Because you're going to run into instances where this will happen and you're going to be in a weird area where you're like, well, we have a 12-minute CSS up here and we inverse this. I don't know what to do. And at that given time, you need to recognize and understand that you should be doing what price is telling you now. Focus on what recently happened, not what happened in the past. Because ultimately, what is happening now is going to give you the best picture and it's going to give you the highest quality setups, right? So we've identified here that we have closed above this 12-minute imbalance, right? Closed above it, got some nice displacement above it. And what do we see in alignment with this, right? We see this big 12-minute fractal. This is a really, really big one, right? We close above it right there, validating it. And what does price refer back to? That 12-minute fractal. And if we want to tailor this down, what do we see in the or on the 1-minute chart right here, right? This is basically the relative most extreme fractal within this area. Obviously, we have some down here, but what do you know about this right here? What is this? A V-shaped recovery, right? Anticipating and understanding a lot of times V-shaped recoveries do not get a deep mitigation is pretty important because it's going to give you confidence because most people are going to be waiting for a deeper mitigation down here. Probably because they're too sucked up in on the 1-minute chart rather than looking at what the 12-minute is telling them, right? Because if we zoom out again at the 12-minute, you can see this right here taps back into that imbalance that we inversed right here while also tapping into that fractal. So we got two layered confluences right there, right? So from there, what we're waiting for is a entry function. What I've talked about and what is all over that PDF is a sweep and a close back into the range, taking entry on the break of that, the candle that liquidated the low, right? So we can see we have equal lows right here. Gets induced right here, okay? We break above right here. Knowing this, right, we can anticipate where for price to draw. If we're looking at the 12-minute, we can anticipate either the 50% of this wick right here. Ooh, let me fix that. The 50% of this wick right here. Let me draw that out a little bit more. Or we can anticipate this high. Or if you're not totally comfortable with this, you can just go for this internal high that was put on the 1-minute. This is going to be your low-hanging fruit that you're going to have probably the most accuracy and confidence taking because it's within the closest relative distance. But in terms of a terminus here, you can anticipate this to be a target as a terminus right up here directly because how violent this close back above this imbalance was, right? This is a big imbalance to close above. And that is a very, very significant thing that the market will do. And it's a really, really good hand tip, right? Would there be anything about the 12-minute fractal that would invalidate the sweep into the zone play? What do you mean? I'll answer that real quick. Most of the times, they'll just give like a sweep and a tap is really all required. In terms of invalidating it, it's going to be like a close above, pretty much. Oh yeah, this is a good one. This is a good one right here. All right, this next one right here. I think this was, yeah, this was that short, that first one I basically posted. This was that tape read when I was at the gym ski. But what do we see right here, right? If we go zoom out, this is a little bit of a higher time frame, and I think this is the one Brendan was talking about. If we zoom out up to the 72-minute, right over here, what do we see? Just chilling right over here. Big 72-minute imbalance, and we keep wicking these highs. And each time we wick these highs, what do you know, or what do you realize price is doing right here, right? Wick, suck back in, wick, suck back in, wick, suck back in, right? And all of those are going to be good for decent quality scalps, right? So this is a little bit of a different entry drill, and this is not specifically what I talk about, but it's using the confluences that I presented in that specific PDF file that I shared, right? But this is not something that I would probably be taking on live, if I'm being brutally honest, but it's still something good to cover to familiarize you with CSS candles, because, I mean, at the end of the day, they are very, very powerful in themselves, right? But we can identify already right up here, right? As I said a minute ago, what do we have right here? AKA a middle finger pattern. Big balanced price range. What are we not anticipating? A deep mitigation, at least short term temporarily, right? So what we do is we refer back up to, this is going to be a 72-minute imbalance right up here. We have referred to it several times, and each time we have tapped it, you can see we get a move off, get a move off, get a move off, right? So consistently within this more AM session creeping into lunch, that's just a kind of an intuition and something recognizing right there, more so than a pure structural point. But what we see right here is we do close above this high, but if you understand what happens even with closing above, and I kind of want to note this too, because this is a little bit more advanced. I'm not trying to get too jumpy here, but you see we fail to close above this high right here. You can see we close back into the range, and I don't want y'all trying to do this, because in a lot of instances it's going to be dependent on where we are in price. But I still want to talk about it because I will be referring to this at some point in time. You can see right here, we have this high right over here. What do we not do right here? We close back within the range. The following candle, what does it not do? Close above that high. This candle right here, what does it not do? It does not close above the high. So if we're going by a wick basis and where these body closures are, we can anticipate all of these to be basically low time frame sweeps, right? Because I'm willing to bet you, or I know for a fact, if I go down to the 5-second chart right here, there's going to be a sweep right here. There's going to be a sweep right here. Those are all going to be inducement points and directly correlated to why we got this semi-violent move right here, right? So once that occurs right up here, right, we see strong displacement with a imbalance attached to it. And I'll say that if you're wanting to play some CSS candles specifically, the strongest ones will have a decent size color-coded imbalance. That should ring a bell. Directly attached to them, right? Because that's showing speed and willingness to continue down lower, right? So closure below, imbalance confirmed, taking entry right up here. I took my entry on the break of this candle that put in the high. This is the same exact function as just a normal entry drill would be, taking basically the breakout of that candle, stop being at this high right here. I think I had it up here. And right here, I was just targeting low hanging fruit for a double tap right on this candle, right? You could be saying, why didn't you target down to this low? It was a little bit of time, right? We were at or within basically still New York lunch. Keep in mind, these are CST times prior to the 12:30 basically PM open. So I'm wanting to go for low hanging fruit objectives in this specific instance, right? But in terms of a terminus, it would be at all these stacked lows, because even relative equal lows carry the same function as dead equal lows. We'll go mitigate, run a high, and then refer back to them in the ladder of price, right? So there was that setup. This one was super quality. Let me zoom in on the 12-minute right here. So this is a perfect trade in terms of just super quality structure formed, right? So if we look over at the 12-minute on the left side of my chart, what do we see right here? We see a wick, right? Wick below, close up, back into the range. Now, this is the entry function that I talk about on the 1 minute. But the beautiful thing is this happens on every single time frame. I mean, we all know the fractal nature of price, right? And it's something important to understand that what happens on any given time frame is going to happen on all time frames, right? So you can see the specific thing right up here. We close back within the range, right? We close back right at, I think it was 12.12 right here. So this confirms that these up here are weak highs. I am waiting until that specific thing happens. I'm not taking a entry until that is confirmed. So you could be, obviously there's no structure formed here, but if, say for example, some fractal play or some sweep happens in here before this closure, I will not be taking that. I will always be waiting for that confirmed close, given respect to the time frame before I look or even think about engaging in a setup on the 1 minute chart, right? So once that confirm happens at 12:12, what do we see happen? We consolidate a little bit, induce right here, take out that low, save that low for later, which is why close above right there. This should be the protected low in this instance on a micro time frame, right? So we come down, we induce this low, take a break right up here, right? Targeting really obvious relative equal highs and weak highs. This point right here can be used as a trim or a break-even point if you're in multiple contracts. You can either trim there or trim at this fractal right up here. This would be really, really quality. But a terminus for this would be right at these weak highs right up here, right? So getting into the next setup, there's actually quite a bit of stuff to cover today. Let me go over this on the 12 minute because this is also super, super, super nice. Inducement means taking liquidity, right? Yes. It's basically just kind of like an internal, it's trapping people, like, right? So right here, what do we see? This is really sloppy, and this is why I say you always wait for the cleanest like CSSs, because those are going to be the ones that are going to be actually the most prominent. But what you can see here is this technically right here. We have a CSS right here, right? We get a layered CSS right here, but look how sloppy this is, right? Basically, inducement is just trapping those people that are going long a little bit early and playing really tight stops, right? They're playing stops at this low rather than the actual low where it should be until this specific function occurs. And that's basically what inducement is, Rico. This next setup right here, I can delete some of these, and I'm going to clear up my chart so y'all can actually see these since we're getting past these setups. And this is a beautiful thing. I'm going to talk about some candlestick structure right here too, because it's really important. And you could literally trade these setups with almost as much precision on the 12 minute chart, really, if you wanted to, versus like the 1 minute. But right here, what can we see, right? First and foremost, what do we get? We get a sweep, we close back into the range. Automatically, if we zoom out, the low that put in this high is over here. We have this low, external low that put in this high. Where is it, right? Way down here, okay? Zooming back in and understanding that these are all going to be low resistance liquidity points. We close back in within the range. You can see we get the strong displacement right here. What do we form right here? 12 minute CSS right here, okay? Strong displacement away. We start to gravitate back towards this 12 minute CSS. What do we see resting in here? Right? And this is something I just said a minute ago that I didn't like, but in certain instances, it's going to be important because sometimes specific things are not going to happen. Obviously, if you're not comfortable playing these type of plays, it's definitely best to just wait for those kind of internal inducement points. But when you understand the true narrative of price and what is happening at this specific point, it will make sense, right? And that's something I'm going to dive a lot more deeper into. But like I said, back to this specifically, we have this 12 minute CSS. We see we get strong displacement low. This low being swept and closed back into doesn't spook me because I know this is going to be some form of basically just retracement back up here, given we zoom out a little bit and anticipate where price is gravitating towards, right? And it's all of this low resistance right here, all of this low resistance, right? So anticipating that retracement, we have a high nestled right within here, okay? We have this imbalance right here directly attached to it. Simple, simple, simple. We come up, we take that. What do? Close back within the range. Where are we taking entry? Off the break of the candle that liquidated the high and close back within the range. So we're taking the break off this. And where can we target? There's a couple places we could target. This could be a break-even point right here. You could trim at this CSS body right here. And you could ultimately hold towards this terminus low right here. And if you look right here, what do we have? These to me are almost dead equal lows, right? We form these, we go run this high that put them in, we go run this high that kind of put them in. They're more internal than anything, but it's important to note that in terms of target because you'll see almost every single trade I take has some form of either relative equal highs or dead equal highs or equal lows that have already had their function completed, right? And given that, we can anticipate that to be a high likely draw. And that is why almost everything I take targets those, because I know with high conviction, those are going to be met given specific functions have been completed, right? So obviously, you're going to say, well, yeah, you missed out on a lot of profit here, right? Now, and that's another important thing I want to talk about. And I see a lot of people struggle with, which is kind of irritating, is they'll look at this and just be absolutely just pissed off at themselves, being like, oh, I missed all of this profit. But at the end of the day, like I said, profit is profit. And it's exactly in that first setup, right? Profit is profit. You had that point in mind from the get-go. You understood that there was a possible chance that price could gravitate towards this low, but it's never guaranteed, right? And it's always to be more, or best to be more defensive than anything, especially in these markets, trading NASDAQ specifically, right? Because, you know, some things get funky. Right here, this next setup, this is actually super quality. And you may think this is counter trend, which it is, but there's more to it, right? There is far more to it. You can see we have all of this massive move down. And this is something I've talked about. I'm not sure if everybody in here has always been or has been in like the previous reviews I've done or watched like YouTube recordings, but I always talk about these like V-shaped recoveries and lack of consolidation on moves down, because a lot of times when setups occur going into them, they're still going to give clean moves because the lack of consolidation. There's multiple points that price could reference to, highs, multiple highs, whatever, in that given price, like, right? But what we see form here and what made me okay with taking this, because if we focus on current structure, this technically wouldn't be counter trend, right? Down here, we can identify a CSS, which is stemmed from this big 72-minute imbalance right over here, right? You can see we come down, tap it, close out of it, which is almost the same exact function as closing back within the range. Close out of it, form a 12-minute CSS, right? And here, I'm not really anticipating anything because you can see not much structure is formed. There's actually, I think someone sent a screenshot of, I think this long right here. I would not have been comfortable taking this, and I'll be dead honest right there, because to me, this is picking a bottom because enough structure has not formed, right? We don't even have a 12-minute CSS there. We don't even have a 12-minute fractal or anything, right? And I wanted to point that out right there for, I'm not sure if he's in here or not. But what we see here form, right? We get a confirmed 12-minute CSS right down here, right? But what we see form right here is a big 12-minute imbalance, as well as this fractal right here. We have this. Let me zoom in right over here, because I know some people may have questions on it. Let me drag this over a little bit more. You can see wick high, wick low, body closure above right here is what confirms that fractal, right? And we can see price refers right back to that once we have confirmed it. And what do we get? Another inducement step. There was a lot of inducement plays today, which are actually some of my favorites. So it's literally a picture perfect world, right? But we get an inducement play. We have a big 12-minute imbalance right up here, which is why price did not really want to push much lower, right? We had layered confluences, especially on the 12-minute. They're always going to be very, very strong. And we even formed, which is honestly was like the most confluence, especially in this setup, because like anytime I see this, it's always going to be awesome. You can see that we put in these equal lows right here. And if you know the function of equal lows, what happens is we form them and then we'll go run the high that puts them in right up here. So we can automatically identify this to be a low hanging fruit target for price to reach to because of these equal highs right up here. Price comes up, liquidates them, refers back, and then continues, right? But in regards to entry right here, we induce this swing low, close back within the range. We're taking a break of this candle right up here. And where can we target, right? We automatically, if we're on the 1 minute, if we don't want to look on the 12-minute for a certain POI, we can identify this right here as a low-hanging fruit target. Or if we want to zoom out a little bit, what do we see right up here on the 12-minute as a low-hanging fruit target? It's 12-minute fractal right over here, which would be taking you out a little bit above that high. But there's something important I want to note about this, and I think it would be pretty beneficial, is if we, let me delete this real quick too, because this will clear this up. Right here, you see right here, let me drag this over. We have this sequence right up here on the 12-minute. You can see this green bar. This black bar puts in a new high. What do we do right over here? What can we classify this as? 12-minute CSS, right? We can understand that price is going to be gravitated specifically towards this, right? So identifying that fractal right there where would a high probability target be? And you can see the reaction this gives too. It is going to be the high of that fractal, because technically this 12-minute CSS candle right here is unmitigated. We did not close above or below it until this candle closed right here. Price did not close below it before. So to me, that is not mitigated, right? You can see we wick it, we close back within the range, but then we close below it on this 1:24 p.m. CST candle right here. So this is going to be an unmitigated candle, and a deeper retracement is always going to be likely here, right? So anticipating that as a high likely target, if we look at the 1 minute, the high of that fractal is going to be right up here, right up here. That is going to be a really quality target. And then, oh, this one was really good. I need to go back real quick right here. This one was really good for CSS projections, and I really hope y'all have seen me talk about these, because it seems when I said something like a week ago, after I talked about it for a little bit, that people just like, I'd never heard of them in their life. But CSS projections are taking standard deviation projections off of CSS candles. Right here, you can see that we have this down bar right here that liquidated this low. We close above it on this bar right here. So this validates this CSS. You can see price refers back to it right here. So we close above it right here. Okay, so once that closure right here at 2:18 p.m. happens, we can automatically start to get a projection off of this, because I want to say this too, real quick before I continue. The reason you can get projections off of these, because if you understand candlestick structure, right? This is a low, this is a high, this is a low, this is a break above this. So this is going to be some form of manipulation leg on a lower time frame, right? So anticipating that and understanding that, it is still 100% a valid point to frame some sort of standard deviation projections on. Because if I'm being honest, the market moves off of deviations away from a specific certain range, right? But what we can see here is, if we know the function of standard deviations, you can see this -1, -1.5 is a retracement likely area if you are in the correct direction of order flow, right? You can see this specific area sends price back to essentially move origin of this move right here. You can see price refers back to this CSS candle right up here. This is going to be basically the move origin for me, because this was the last down move before the move higher, right? And you can see we come up, we fail to close above the -2, -2.5, which can also be a retracement, more likely a reversal area. But on a micro level, it's not going to be as strong. These are more so just really high quality targets that you can use and frame exits off of. More times than not, the -2, -2.5 is going to be your best bet, which is almost a guaranteed 2 to 2.5 R, right? So understanding that right there, I wanted to kind of explain that CSS projection, because they happened on almost every single CSS today. And I'm going to leave that up to y'all to go back test, because I want you to see it with your own eyes rather than me just drawing it on my chart right here. But this is the last setup I want to talk about, and where I kind of went wrong here. And it was actually because I didn't have the CSS projections plotted on here, because I was a little too fixated on the equal lows, but I want to talk about it too, because it was still in my opinion, a good quality scalp. I did get stopped out for break even on this one. But like I said, we had that unmitigated 12-minute CSS right up here. We got a really nice deep mitigation, semi-deep mitigation, close to the 50% of this area. We have this beautiful 1-minute fractal right up here that we're wanting to see price react towards. And you may say, why this fractal? This is the most obvious unmitigated fractal right up here. You can see we have this fractal above that we tap. So this is already going to be mitigated to me. This is an unmitigated fractal resting near or within the 50% of this little area right over here, right? And understanding that is going to be pivotal, because the highest probable low time frame areas are going to be within that specific area. They're going to be near 50% of a zone, 50% of an imbalance, 50% of a CSS if you're on a higher time frame, like this specific example. And you can see why this would be a trap right down here, right? And we also have this beautiful 1-minute high resting right over here. Okay. So we come up, we liquidate this, induce this high right up here, close back within the range on this 2:37 p.m. candle. And where are we going to be taking our entry? Off of the break of this candle that liquidated that high right up there, right? And where I should have targeted, now I'm going to talk about that, is my actual break even point was right here. I did end up going a little bit, I think I went break even right about here when I got close to it and started to come back, because I really didn't want to see price come much higher because it was getting close to end of session. But realistically, let me bump out these standard deviation projections off of the CSS. Where should I have closed? Look at this. It literally does not get much more precise than this. I'm telling you. -1, -1.5. What happens? We retrace back to this 1 minute CSS right up here. From there, we displace down to the -2, -2.5. What I should have done right here is I should have closed right here or at the body low right here, because where does that perfectly align with? That -2, -2.5 area, right? And we know with high likely target off of these CSS entries after they are confirmed after our original entry, these are going to be our highest probable areas for your target right there. So that's just like a full transparency on that, because that should have been a winner, but I was getting a little too fixated off of these equal lows rather than zooming out on the 12-minute chart and seeing all of these fractals, and that we inversed this 12-minute imbalance right here, meaning the mitigation down here was very, very, very unlikely. So I think that was all the setups I wanted to cover today. So I'm going to go ahead and open the floor up for questions.